Hey, I'm the CEO of Net Capital. I'm going to skip the customary disclaimers, but Net Capital is a fintech company, and we build and operate a digital private capital markets ecosystem. So we do four things, really. We empower private companies, large and small, to raise capital online through an SEC-registered funding portal. We provide both accredited and non-accredited investors with access to new investment opportunities in private companies, both large and small. We market those private capital raises, and we incubate and take equity positions in a few early stage companies with disruptive technologies. So really two different business models. One is the funding portal, and the other is a series of minority positions in 19 companies at this point, valued at about 22 million on our most recent financial filings. And on the funding portal side of the business, we have over 115,000 investor accounts, I think we most recently disclosed, and we've raised more than 60 million for more than 225 companies at this point. Why now, you would ask, for something like this? Well, for context, these things are now possible because of something called the Jobs Act in 2016. The SEC basically changed the landscape for private capital raising and investment. And the regulations did two main things. They, on the one hand, allowed the general public, so the more than 90% of households that aren't accredited investors, to invest in private companies. And they enabled those private companies to advertise or generally solicit their security offerings. We believe this is a huge market opportunity. It's relatively new, but it's the potential is in the trillions. Private capital markets, obviously 12 trillion, I think, in 2022, private equity representing 3 trillion of that. Those private capital markets growing much faster than public markets. And an enormous amount of capital in retail assets represents a large pool of potential account holders for Net Capital. And we see, obviously, with things like Destiny Tech 100 and others that I'm sure the audience is familiar with, that there's a huge opportunity for retail investors to get into, private companies, especially as they stay private for longer. And that's part of the traditional model that we're solving for, is that the traditional model is very restrictive. It's very difficult for entrepreneurs on one side to raise capital because it's tough to access that VC network. The odds of success, even if you do, are very low, and in the end, the deal terms aren't great. So it's tough for entrepreneurs to raise capital. And on the other side, more than 90% of households are locked out from investing in private deals. Again, something that's become increasingly problematic as companies have stayed private for longer. So what we do is we bring it online and solve some of these problems. So we're fundamentally disrupting this landscape by, on the one hand, giving innovators access to capital, and by giving any investor, not just the connected ones, access to early stage investments through low investment minimums and steady deal flow. Beyond the startup landscape, by the way, we're also able to unlock a powerful opportunity for larger private brands who can turn regular customers of theirs into owners and ambassadors for those private brands by through our solution, and they share in the value being created in a way that's never been possible in private markets before. Our industry and our business specifically has been helped by some ongoing tailwinds. Really, the one-time pandemic shift really brought a lot of things online and made a lot of people comfortable with doing things online that maybe they hadn't before, like investing. And doing diligence on companies. So that continues to spur the industry. And then the regulatory environment, they've continued to expand the amount of capital companies can raise. Started at $1 million, it's now 5 million within a 12-month period for the Reg CF funding exemption. More recently, too, the pullback in venture funding and public markets coincided with strong growth in our funding portal business, so people coming to us looking for ways to raise capital. We recently disclosed through Q3 of this financial year, so we're at April 30th financial year end, so through the end of January, the first 9 months of the year, our portal revenues were up 70% versus the prior year. And speaking of revenues, this is kind of our business model. We take a 4.9% success fee on capital raised through the platform, in addition to some fixed fees for onboarding and so on. But 4.9% is the primary scalable success fee. And then, as I mentioned, we have a consulting business, Net Capital Advisors side of our business, where we consult for cash and equity positions. And those equity positions really give us some optionality through, possible exit, sale, or IPO. The funding portal itself, as I mentioned, is an SEC registered platform, allows investors from almost anywhere to invest anywhere in the world to invest securely, and allows issuers to accept those investments from virtually anyone. So a very robust and scalable platform. If you looked inside our company at what people do, a lot of it is associated with onboarding. We have a TurboTax-like onboarding process for issuers. So a company comes to us, gets up and listed on our platform with required regulatory filings, offering pages, compliance reviews, etc. We include third-party transfer agent and custodial services. And we also support those issuers' marketing efforts and provide access to our investor lists. So more than 100-point compliance checklist we complete for every issuer, includes diligence on the management team, the cap table, web presence, etc. We're basically here to protect investors by making sure that the issuers are onboarded in this kind of robust and transparent way. And as a result, we've built a very scalable platform. We had an issuer, Magfast, actually raised $1 million in a day, so almost 1,000 investors successfully invested through the platform in that 24-hour period back in November 2020. They actually came back a year later, raised another $2 million in 2 hours on our platform with about 4,000 investors. In November of 2022, they actually did a third round and raised another $1 million. And in fact, they just recently closed an additional round on our platform. So again, it's a $5 million limit every 12 months. And companies, who build momentum on our platform and within our community can then, come back multiple times and have done. We have other success stories, companies that have gone on. I mean, I mentioned at the beginning this, the Jobs Act was 2016. It took a little bit to enact and to get everybody up and running. So, we're still relatively early in the life cycle for many of these companies, but we are starting to see some coming through and sort of coming out the back end of our process and going on to other things. So Vantum Global, for example, manufactures proprietary energy efficient modular building panels for net zero homes, and they went on to close a Series A led by Bill Gates Breakthrough Energy Ventures. And then a company called Energy X, which has developed a more efficient and sustainable method to extract lithium, which is a key component obviously in batteries for electric vehicles and other devices. They raised more than $4 million with us in 2021 and recently announced a $50 million funding round led by the venture arm of General Motors. So we believe these examples kind of validate the power of the platform and the power of the platform as a launching pad for innovative ventures. Looking forward, a couple of things. This one we've highlighted before. So a key next step for us is to provide some liquidity through a secondary trading platform. The goal is to provide liquidity to users of Netcapital by allowing them to trade the shares. Obviously, one of the challenges with early stage investing is liquidity and the patience that's normally required. So securities on our platform that have been issued are specifically designed to be tradable. So they're straight common stock and free of any transfer restrictions. So I mentioned more than 225 companies have come through the platform. All of those securities are straight common and free of transfer restrictions. So we expect as we build this out to be a key differentiator, offers the opportunity to enhance revenue and cash generation for our business. We have built out this platform. It's in what I would call closed beta testing right now. We're trying to make sure that everything is what it needs to be from a user experience perspective and also from a regulatory perspective before we open it up, but we expect that to be launched more widely soon. The other thing that's not on this slide, but we announced a week or two ago, is that we are in the process of becoming a broker-dealer. So we're pursuing that license to become a broker-dealer, and that will allow us, among other things, to participate more directly in the exemption that sits above Reg CF. So I mentioned Reg CF is a $5 million a year raise limit for a company, and we take 4.9% of that. Reg A, or Regulation A, which sits on top of that, allows companies to raise up to $75 million a year. And obviously we would, as a broker dealer, we would be able to take a success fee against that money raised. So we look forward to that being a way to help scale our revenue going forward. But that process is underway with FINRA. I mentioned a few times net capital advisors. So outside of the funding portal business and the secondary trading and the Reg A, net capital advisors team is a group of investors, entrepreneurs, marketing professionals, and the role of that team is to assist private companies with the fundraising process. So that team markets deals on the platform through digital marketing, investor introductions, and so on. We also incubate and accelerate some companies of our own. And as I mentioned, the compensation for that is a mixture of cash and in some cases equity. This is just sort of some examples of the companies that we have in our equity portfolio. And as I mentioned, this is currently, there are actually a total of 19 companies on the balance sheet at about a little over 22 million, or a little under 22 million, I think, in our most recent quarterly financials. From a competitive standpoint, there's a few folks we sort of pay attention to. Start Engine, WeFunder, and Republic are the most common, and we vie based on capital raised in any given month for sort of, we're either third or fourth in the list in terms of scale in North America. But we believe, the opportunity to disrupt this market, this private equity market, allows plenty of room for multiple competitors in the space. The key advantages, though, for us are that automated onboarding process and issuer experience that I described, which we consistently get very positive feedback on. We are lower cost versus our peers deliberately. So that 4.9% fee is considerably lower than most of our peers. And of course, that secondary trading functionality is something that no one else really has at this point. And in fact, given the way their platforms have been designed and the securities they've issued, they probably wouldn't be able to easily replicate what we have or what we will have, what we hope to have. And you can see some of the multiples. These things move around, but on a multiples of revenue basis, these are all private companies. We're the only publicly traded company, but they report enough financials in their business for us to know that the multiples they trade at are much higher than us, where we're less than 1 times revenue right now, and these guys obviously are trading at much higher multiples. So we believe that's a great opportunity for investors. The team, we have a great team. We have about 25, somewhere between 25 and 30 employees in total right now. Half of those are virtual outside of the Boston area, the core of the companies in the Boston area. And alongside myself, I'm fortunate to have a great team. Corrine, who's our CFO, is a CFA charter holder, former Morningstar 5-star rated portfolio manager, with a master's degree from MIT. And Jason, who founded the company, after watching one of his friends struggle to raise money for his business for the reasons I described earlier, Jason founded Net Capital. I was on the board for a while and then stepped into the CEO role on the back of a transaction that we did, the company did a couple of years ago. So in summary, from our standpoint, we believe Net Capital is a tremendous investment opportunity. We're empowering everyday American entrepreneurs to pursue their dreams while simultaneously disrupting this multi-trillion-dollar digital private market. We believe it's a big market, which is good. Certainly there's momentum in terms of the way people use the internet and to invest, the regulatory changes that have helped us increase the scale of our business, the fact that our platform has proven scalability, We have established now a track record enabling companies to raise capital, which is obviously the number one source of new business, is being able to demonstrate that we've done it successfully. And then, as I've mentioned a few times, those equity stakes that we take in a subset of these companies provide upside optionality through possible exits. And before open up to any questions, this is just a little bit of what some of our peers are saying. We've had some coverage with Jim Cramer, Mad Money, Jason Robbins, the founder of DraftKings, who's an advisor to the company and a Boston guy. So I think that's all I had in terms of prepared remarks. Happy to take any questions if folks have them.
Sounds good. Thanks, Martin. If you do have a question, you could please ask it at the questions section of the GoToWebinar panel. I'll start with some of Singular's, and then we can jump to some questions from the audience. Do you see the crowdfunding market consolidating? And if you do, would management consider using their NASDAQ listing for a potential partner?
Well, that sounds like two questions. So first of all, consolidation. I mean, as I mentioned, yes, there are a few players that we pay attention to. I think there's already been some weeding out. I think there's been some of the more peripheral players that have exited the market one way or another. There's been at least one acquisition in the U.S. market. Seed Invest was acquired by Start Engine. So I think there's plenty of room in the marketplace at the moment for multiple providers. We're very early in the cycle of the industry relative to what we believe the potential is. So we're not anxious to do that. That being said, we are the only public player in the space, for better or worse, and the better or worseness varies. So we're always being approached by folks who have ideas about things we should be doing differently. We're pretty focused on our own mission right now and believe that that's the best way to create value for our shareholders.
Where does the company stand with the ATS system?
So yeah, the ATS system, or what we call the ATS, just for the audience purposes, that's an alternative trading system. So that's a particular kind of broker dealer, and we partnered, as I mentioned, I think, with Templum, which is a company based in New York, which has that particular license. So they are our partner for secondary trading. And I mentioned we have that platform. I mean, no product is ever done, right? But we have that built out to the point where we can execute trades, and we're doing that in a closed beta environment. We just want to make sure that we are that we have all the sort of I's dotted and T's crossed, because we're doing something completely new, both from a user experience, allowing folks to trade real time in private stock. So it's a new user experience. It's also, quite frankly, a relatively new regulatory experience, and unique, coming out of the Reg CF space and partnering with an ATS. So we want to make sure that we're taking the time to get it right. We're not anxious to rush into it, but it's I would say it's kind of week to week in terms of our view about when we would be ready to take the training wheels off.
How will you be financing your growth over the next year or two?
We, as I mentioned, the funding portal, which is the cash part of our business, grew 70% through the first 3 quarters of this year, and our year end was April, so through January. So we feel good about the cash generating capability of the core business. We've also tightened up, some of our operations to reduce some of the burn. That being said, we're not cash flow positive, so I do expect that from time to time, we're gonna need to consider raising additional capital to get us from where we are today to being fully cash flow positive.
Will you be changing your mix of payments for services to be more cash?
We have seen in our most recent quarter, I mentioned that that's happening to us in a way. We are certainly seeing our funding portal revenues a strong increase year to date versus the previous year, and we experienced a decline in our consulting business. And so I'm not necessarily suggesting that that's what we expect to continue, but that's what we've seen. And those businesses, you know, while they're related, they're sort of different. I would love to get paid more cash for the consulting work that we do, but you know, we are working with early stage companies, innovative companies, startups who are looking to raise capital. So in many cases, we found that, you know, the only way they can pay us really is with equity. So, and we're okay with that because we believe, again, that there's optionality in that portfolio, you know, for exits and IPOs, and that will generate cash. So that's frankly one success in our portfolio company, one successful exit, you know, could generate enough cash to get us to cash flow break even.
Are you noticing a pickup in market activities this year?
Yes, I think we are. Certainly, yes, I think for the core funding portal business, we saw at the end of last calendar year, we had a couple of issuers who really kind of blew the doors off. We had a company in the second quarter of the year. We had two companies. Averdane raised 4.5 million, and a company called EarthGrid. So both kind of technology companies raised 3.3 million. So again, with a $5 million maximum, we're seeing, I think, you know, a consistent growth in the number of issuers, but more importantly, we're just having more kind of the I don't know what you would call them, but the whale type issuers in our world anyway, the companies that are raising between 3 and 5 million versus, or even just over 1 million versus, you know, 500,000. So so I think we're seeing strong interest, and we're seeing strong interest in companies who are coming back to the platform. As I mentioned, we're starting to see now issuers come back for a second time, which is great because they have momentum on the platform, they have an audience, they have a community of investors who they can go back to. And really that's the kind of relationship that we're trying to help our issuers build.
Okay, sounds good, Martin. Do you have any other final closing remarks? So there are no more questions on our end.
No, I mean, I appreciate, again, the audience. Thanks to everyone for your interest, and feel free to reach out to me directly with any sort of follow-up questions. I'd be happy to answer them.
Okay, that concludes the presentation on Net Capital.